Hello, everyone. Good morning. And depending on what time zone you are tuning in from, good afternoon. Excited to welcome you all to another edition of our Forex Money Mastery. In fact, where's the edition where we intend to look at how well the asset we're monitoring since the beginning of the week has been doing, and of course use that information from both fundamental and technical analysis to strategically prepare ourselves for the second half of the week. And before I go into the details, apologies for coming in much more late today. Of course, I keep battling with my internet reception issues in this location I am. And we're still working on it. We're still trying to, most of the major ISP providers are not really working in this particular zone. And of course, we've had some options which we've called in, and hopefully by next week we will have a better experience during the Forex Money Mastery. So please bear with me. We could have a little bit of lag time, but trust me, you can still rewatch the video after it closes, the replay of the videos, and this will give you a easy and seamless watch. All right, so please pardon me if we have any, but to ensure that things are working very well. Today is Wednesday, the beginning of the midweek, and of course we have some interesting development in the market. So far, the US dollar has done not too good this week. We saw the US dollar drop significantly past 48 to 68 hours. And recently, the Fed chairman kept a cautious tone as regards to Fed interest rate decision. A hurry to cut interest rate at the moment, but they are open to rate cuts if inflation slows down or job hiring weakens. And if you've been following the news in the US, there's been a lot of call from CEOs that the Fed chairman cut interest rates. Labor sector is not doing very well. Inflation is thinning out, and of course this has it at the moment, and of course this has left the US dollar in a wait and see mode, not overly strong but not collapsing either in the last 12 hours. Now if we look at the DXY chart, that is the UX index, you'll see what happened this week. Though the week started with a sign that it wants to go bullish, as we saw price break out of that $98.15 on Monday, and immediately into the New York session we saw that massive decline in price, taking out a lot of buyers from the market, and of course bringing price back into line of the descending channel. And of course you can see here the last 24 hours we've seen that consolidation, which further emphasized the indecision currently going on in the market. Now market is now pricing in a 50 basis point cut by the 20% chance of a rate cut in July due to the current tension we are experiencing at the moment. And of course this mixed message from the Fed is keeping the dollar under slight pressure, especially against safe haven assets such as the gold and the yen that is also on our watch list. Now if the Fed's unwillingness to rush into the dollar at the moment, we could find some support around key levels on this chart. Well, for me at the moment, I think we have something around the $97.80 level. Remember, this was that same point during the second week of this month that pushed price into the recent high it is It was this month before we saw that breakdown back. For me, I guess the dollar is at a critical support zone, and the question now is whether this could be another platform to send price going higher, or are we going to see a situation where this key level will be broken to the downside? And if we also consider the geopolitical tension in play right now, there is a recent development of the Israel-Iran ceasefire situation, which at the moment has reduced fears. So traders are less desperate for safe haven asset like the US dollar. And if there is any form of renewed clashes or missile strikes, it means that the ceasefire is shaky and keeping some risk premium alive, and which could also help the US dollar climb from this. And looking forward to today and the remainder part of the week, we have major key data releases that could move the dollar big time, maybe to the upside or to the downside. Now, today, Wednesday, June 25th, we have the Fed chairman's testification before the U.S. Senate, which is also going to be a major event that most key players in the market would want to listen to, hear what the Fed chairman's narrative is as regards to monetary policy before making any aggressive bet against or to how the labor sector in the United States is doing. If it's not doing very well, it could further make the dollar decline. But if we see a surprise, then price of the dollar could rise. One of the major events I will say for this week is the core PCE coming in on Friday. And of course, the core PCE is considered to be the Fed's preferred inflationary gauge in the United States. Now, like I did say earlier, the Fed chairman on the fact that the Fed is not in a hurry to cut interest rates, but they are open to rate cuts if inflation slows down or job hiring weakens. Now, from the core PCE here, the expectation is that it will remain the same as the previous month, which is pegged at 0.1%. So we look forward to see what the actual data is going to be. Is it going to fall below the expectation, or is it going to come in higher than market had expected? And of course, we know what the implication of this is. If it comes in lower, this could be a significant dent on the US dollar as it becomes less attractive for investors to come to. And if it comes in higher, we could see a spike in the value of the US dollar. So these are the major events we are looking forward to. And of course, the anticipation of this event could cause an extended sideways trading activities as market participants slow down, wait for these informations to come in before making any investment decisions. So with that said here, and of course with the information we have, let's scale into the asset we are monitoring for this week. So the first asset we are going to be looking at, as always, is going to be the USOILSPOT. And of course, we saw this massive move to the downside since the week began, as you can see here, and I do hope you are part of this move. Now let's quickly run through the technical details and what we're actually looking at the beginning of the week. Now you can see both of the ascending trend line we spotted at the beginning of the week is broken to the downside, as you can see here. And of course, when we scale down into our execution time frame, we begin to see how the price evolved in the last 48 to 60 hours. Now let's zoom into the structure we were looking at the beginning of the week, as you will see here. we had a range bound structure. Though bullish note, I told you how I took about $54 profit from that spike as a result of an open position I had over the weekend. And since then, price had dropped significantly. And I can remember on Monday during our live session that price had already broken down the support line at the $73.70 level, and I did mention that I will only sell if price comes back to retest that particular structure, and this was exactly what happened. We saw price come back, retest the structure multiple times, and during the second or third hour of the New York session, we saw that massive move to the downside. I was taking out around the $69 level. I think that was about how many pips? About 470 pips. I wasn't unable to maximize the bearish move, as I felt this could be a shakeout. As you all know, we saw expectations that the US oil could rise at the beginning of the week. So for those of you who were able to capitalize on this opportunity, well done, and kudos to you. Now, as it is right now, what is really going on in the market right now? The market has since gone through a consolidation after testing the $64 zone. Now, what is the basis behind this? What are the reason that we are seeing a consolidation at this point in time? Hold on a second. I guess I'm having let's see what's going on here. I hope you guys can still see me. I hope we are still together. Please let me know in the comment section, all right, if we are still together. Give me a moment, please. All right, so sorry about that. I just had to tweak something here. Okay, so where were we? So we were talking about how the US oil has slipped to the to a 2-week low around the $64 zone, and market has been going through a consolidation. And this old downtrend scenario we see in the US oil can be attributed to the Israel-Iran ceasefire, which had cooled supply fears, and of course markets is now looking at US stockpile data to determine whether to continue selling or holding on to the US crude oil. And if we look at the US crude oil inventory that came out last week, we saw it drop by 4.3 million barrels last week, though it's still a drawdown, but less than the previous week. And whenever we see a release of a drawdown report, it tells us that the demand in the market is still high. It means there is still a tendency for demand to rise. So what does a drawdown mean? A drawdown means that the supply in the market was not enough to meet the demand, so they had to increase so as to meet up with the demand in the market. So technically, that tells us that demand has suddenly increased last week. Now, going into the new week now, is this the case? Are we still having a drawdown? Because this is just a reflection of what happened last week. Now, another factor that could also influence, and because of that drawdown, we could see this area around the $64 area as a lean towards this this data to maybe do a retracement back into structure before another wave of bearish momentum happens if the sentiment for the US oil declines. Then if ceasefire also holds, I mean the ceasefire Israel and Iran holds, price may stay low or move in a sideways as it has been doing here in the last 24 hours as market wait for those major events I talked about earlier. I'm talking about the US GDP, the US core PCE data, like the initial jobless claim count. Then I think we also have the EIA reports due for today. I think so. We have the EIA report due for today. Okay, that's on the low impactful event, and of course major key players will be looking forward to that one to decide whether to hold on to the US oil or sell it. So for me, I think we are at a critical juncture right now, and of course we want to be seeing what the true sentiment around the $64 zone is, and to do that I scaled down into the 15 minutes time frame, and this was what come up with. And as you can see, I should have a sell position triggered now. I wonder why that is not, because I sold, hold on a second. So this is what I was looking at. I had a $65.25 level, a significant role in determining sellers and buying expectations in this market. Then the last 3 days we've seen price go through a downtrend scenario, series of lower lows and lower highs to emphasize the strength of the sellers. And as long as price remains below the descending trend line, we obviously want to be looking out for patterns and structures that support selling ideas. And as a result of this, I was leaning towards selling the breakdown of the $65 area, but unfortunately I don't know what happened. Just checked my what's it called again, my trading panel here, and didn't find US oil there. So I planned, but unfortunately I'm not part of this trade. I don't know what happened. Maybe the broker did not see, was not able to file the price level I placed as my stop loss at that particular point in time. That price dropped below that structure, but it's all well and good. We are at a critical juncture at this point in time, so we shall continue to monitor price action around this area to see what goes on now. So with the situation we have right now, I guess I've missed out on this one, I think. But if we look left, I think we are at a crucial juncture again around the $64.50 level, which is considered to be, is it 64? $64.50, is it $64.60 level? So I do want to be acknowledging that, as it might play a significant role in the next couple of hours. So in this case scenario, you can see what happened here yesterday evening. It was a selling niche here. We saw price break out of the structure during the later part of the New York session, and ever since then price had maintained its momentum above that level. So if we can see a breakdown retest of the structure today or this afternoon, breakdown retest for confirmation's sake, then I want to be selling the USOILSPOT again, maybe back into that support line at the $63.70 level. That's about 90 pips if price moves that far. So that's basically what I'm looking at the moment, maintaining the bearish bias in the scenario. And of course, if I want to buy, I will definitely want to see price break out of that major descending trend line we marked out earlier at the $65.25 area or something like this before I want to start considering buying the USOILSPOT. If that is not the case, we shall maintain a bearish bias. Now, secondly, we might see a situation where price may come back into structure, and if it comes back, continued selling pressure will tell us that buyers are finding it difficult to break above the descending trend line, and this could incite a sell off, and if it happens, we join the sell from there, then place a sell stop order below the $64.60 level to maximize the potential of that bearish move. So that is basically what I am looking at on the US Oil Spot today. I wish us all the best of luck on this one. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take about 5-10 seconds off as always to see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. All right, so I guess we are all on the same page, right? And all I've said so far has been quite explanatory. I wish us all the best of luck on the US crude oil. So moving on to the next asset on our watch list. So the next asset we are looking at is the USDJPY, and it appears the yen continues to stay weak as the Bank of Japan continue to play it safe and markets embrace the Israel-Iran ceasefire situation at the moment. And of course, you can see the US dollar had continued to make some to the upside. I told you what happened on Monday where I missed out on that uptrend mentioned here. So we missed out on this one. I was hopeful that the market will come back, retest the structure. I had a buy here, but I was taken out again. I was taken out of that buy position in a loss. So currently on the USJPY, I'm not in a very good position at this point in time. So hopefully today's trading activities will give me some opportunities to capitalize on some profitable positions to recoup the losses I have on this one. And while looking at the chart this morning, I also saw that I have missed out on another opportunity after price broke down the 146.00 area. Remember, this was our key level at the look at that breakdown of both the key level and the ascending trend line, and it appears that we're having a retracement back into structure, maybe to incite a downtrend continuation or even make price rise to the upside. But from the look of things, the fact that the Bank of Japan is being cautious about raising interest rate because of concerns that US tariffs could hurt the Japanese, to think that the dollar may take advantage of this. So the likely scenario today is that the yen may stay weak through the day as market rides the risk on mood from the ceasefire and the Bank of Japan's cautious tone towards their monetary policy. Now, in that regard, I had a simple setup on the 15 minutes time frame, which I intend to use to navigate this market today and tomorrow. Now, when I scale down into the 15 minutes time frame following that massive bearish move that happened at the beginning of the week, I captured this range bound structure where for about 24 hours thereabout, the market was confined within the range, and I was open to capitalize on the breakout retest of the structure, which I missed. And as you will see, price had already moved over 62 pips. I keep missing out on significant moves on the USDJPY this week. I don't know why, but let's see how the market will play out if it gives another opportunity to capitalize on this move. I'm looking at a potential price coming back to retest structure, which I doubt will happen. But if that is not the case and price continues to rise, maybe I will look for price evolving into a new setup around this area, maybe like an uptrend continuation pattern in the form of a bullish rectangle, pennant, flag pattern, whichever case it may be, to join the uptrend continuation. So I'll keep you posted if I find anything new around the structure on my Telegram platform. So that is my simple view on the USDJPY. Nothing much to say here. So I'll take about 5-10 seconds. Let's see if there are any questions before we move on to the final asset on our watch list for today. And don't forget to mark out the structures accordingly, as you are going to be needing them as a reference point to guide your independent trading decisions. Okay, so moving on to the final asset on our watch list. So the final asset we are looking at is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold commodity. And of course, since the beginning of today's trading session, we've seen gold do a little bit of retracement move as the Fed chairman leaves rate cut door open, and the Middle East tensions shows of relief as the Israel-Iran situation is under control, at least at the moment. Now, with the way things are going, okay, let's talk about what happened at the beginning of the week. So, beginning of the week, let's go back to our 1 hour time frame. My chart is taking some time to load up. So this was what we were looking at the beginning of the week. Remember, we were looking at buying the breakout of the 65 level. As you can see here, price successfully broke out that structure. Remember, I already had the buy position before that breakout happened, but I advised us that if you didn't take that one, let's take this, and we saw price move over 280 pips. And I remember giving us an update on both my TradingView and Telegram platform that we should move all stop losses and secure the current buy position. At that time, price was running with over 150 pips when I updated us on that one. And for those of you who capitalized on that move, well done and kudos to you. Now, as it is right now, we saw how buyers were shaking out of this market as the inability of buyers to break out of the 3,395 level was so clear, and this was followed by Powell's tone as regards to interest rate cut, which gave the dollar a little bit of hope. and the idea of the Israel-Iran ceasefire is still under control at the moment, which is not in favor of the gold commodity. And we saw how price dropped significantly yesterday. Of course, I don't trade on Tuesdays, so I wasn't part of this move. We saw price drop significantly. And one interesting thing I noticed this morning from a technical standpoint is price coming back into that descending trend line we identified in that video I shared during the weekend. So if you look at this structure, we had a descending trend line here. Can you see it? I hope you can see it. Let me highlight it so we can see. You can see price. Now, one thing we noticed during the Asian session was that after this bearish impulsive leg, buyers were finding it difficult to break above this descending trend line, which for me is a red flag that sellers might be in for the second leg of the bearish move that started yesterday. Now, with that in mind, with that expectation, I had a simple trading setup on the 15 minutes time frame. And for those of you who have been following me on my Telegram and TradingView platform, you must have seen that update. And if you do, you will be having a sell position triggered by now. So this was what I was looking at this morning. So I had a range bound structure. Buyers were finding it difficult to break out of the resistance line throughout the Asian session. And of course, we were saying here that if price, hold on, I think it's on the 1 hour time frame. Yeah, it's on the 1 hour time frame. So if price breaks out of the 335 level, we are looking to buy. But if sellers continue to maintain selling pressure, then a breakdown of the 3,325 level is all we need to continue the downtrend move. And of course, you can see I already have about 3 sell positions running at the moment as price broke down to 3,325. So I'm just hopeful that this momentum will continue to the downside. And I do not want to be too ambitious here, so I'll place my TP around that lowest point price action got to this week. So I'm looking at that area around the $3,004 area. So let me just place my TP right now so that I don't forget. You can also do the same at your end, placing the TP somewhere around the $3,304 area. So that is basically what I am looking at on the XAUUSD today. I will only consider buying if price action breaks out of the $3,335 level. So let's see how the market will be. Fed chairman's speech testification before the US Senate today. That will also be giving us an insight into the Fed chairman's perspective on monetary policy. So that is my simple view on the XAUUSD for today. I hope I made myself very clear. If you have any questions, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. So in the absence of no questions, I guess we are all on the same page, and it's on this note we have come to the end of today's Forex Morning Mastery. So I will keep you guys updated as I continue to monitor price action across these assets. I mean the USDJPY and of course the XAUUSD on my Telegram platform. We have some interesting setup this morning. So let's see how they play out as we anticipate the Fed's chairman's testification. And of course, I mentioned that we are looking forward to the US GDP and the initial jobless claim count coming up tomorrow, which will also be playing a significant role for price movement ahead of the final of the week. So for those of you who joined us for the first time, I do hope we were able to gain a couple of new things today. If you did, why not join us in our subsequent editions? The next one is Friday, 8:30 a.m. UTC. That's in time as we come here again to review how well these assets have done and of course prepare ourselves for the final trading day of the week. So I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.